The warning signs are clear. A banking stock meltdown is looming. Here's what you need to know before Monday. I'm your host, Steve Metre, and thanks for joining me today. In our show today, the once unstoppable momentum trade is faltering. Here's why it could signal a broader market sell-off. And as hedge funds are doubling down on the banks, is it finally time to sell or make a case of why? It's time to get out now. And as long-term rates rise and Treasury slide, is it finally over for the long bond? Or is opportunity knocking? Because this is our Sunday show where we like to look at the technicals, momentum, and machine positioning to help you make more money trading and investing. And speaking of making more money, this has been a big winner ever since we featured him on the show. We'd like to welcome FlexShopper back as today's sponsor. You can find him on the NASDAQ under symbol FPAY. And with a strong outlook for the fourth quarter and beyond, FlexShopper is poised to capitalize on its innovative leasing and payment solutions to drive long-term shareholder value. The stock has developed strong buying support over the last 5 days, which could lead to a potential upside return of 22%. Stay tuned to the end of the show or check out the pinned comment or description for more information. Now let's head over to Bloomberg, where we picked the show up with the headline as record year for momentum trade is ending with a widening cracks. And what we're seeing now is the beginning of an inflection point that could lead to a broader market sell-off. And ominously, it was also the second shellacking in as many weeks for the one equity strategy that has worked reliably in 2024, which is momentum investing or riding the market's winners. A record year for momentum has rewarded the faithful handsomely, while also raising risks that blowups like Friday will be becoming more common. And that's the risk we're facing in the markets right now, that momentum is so extended. And right now we're seeing everybody in, from institutional to retail, all across the board. Even hedge funds are all in this market. And what we're seeing now is everything starting to run out of steam, which could lead to a broad sell-off. Momentum is great until it's not, until something changes. We'll make the case of what's changing starting next week, because just ride the wave's been the theme. But the problem is, when momentum has a great year, well, it doesn't tend to last. We can go back to the 2000s where we see the dot-com bubble and we see a big surge of momentum and turns out to a big negative print in the year following. We see that around 2006 and 7 before, of course, we ran right into the global financial crisis. We saw a big surge of momentum right around 2016 that got reversed the following year. And now we're seeing the biggest year for momentum in at least 2 decades. And what that means for most investors is the opposite is about to happen. And we can see signs of that as the S&P 500 has managed to keep rallying, giving investors hope, despite the increasingly small number of members that are rising above their 200-day moving average. And what this is a sign is that we're seeing more companies see a decline in momentum, see their stock price head down, and eventually it's going to impact the majors, where we see most investment money crammed in. But something that's rallying above is 200-day moving average. That's our stock for a sponsor of today's show, FlexShopper. You can find them on the NASDAQ under symbol FPAY, and you can see they've recently pulled back and they found major buying support right here where all this volume is at, setting up a potential 22% move right up into the supply zone. Stay tuned to the end of the show or check out the pinned comment or description for more information. We do not see much that could derail the momentum train outside of AI faltering, and many people don't think AI can fail. They think it's flawless. They believe it's going to change the world. But there's one fundamental problem with AI, is that companies have pumped hundreds of billions of dollars into it, and yet they're showing no signs of profit. There's going to be a day of reckoning for all of these AI companies. And still, with valuation stretch and after Friday's swoon, some investors may be wondering just how long momentum's impressive streak can persist without a break. Well, we think that break is coming soon, and what could cause that is forced selling. We see U.S. pensions sold $21 billion of equities last week, which forced CTAs, or the machines, to also sell. We're going to show you why over the next month machines could be massive sellers here, because right now we're in the buyback blackout window, which is estimated to run all the way through January 24th. So if there's some shock to the markets right now, the biggest buyer of stocks is right on the sidelines. Let's take a look at machine positioning here, because over the next month, if we see stocks move down, They're going to be forced to sell 206 billion of global equities, with 53 billion out of the S&P 500, and with everybody all in, that could send markets plunging. Let's take a look at some of these key pivot levels where we see the machines looking to sell. This from Goldman Sachs. You see the short-term sell point at the 6-month volume profile. You see a breach there. It's going to push right into the midterm sell point, which will likely cause a catalyst of selling, push the broad equity market right below this line here. That's the 200-day moving average. And if you breach the long-term sell point, watch for the machines to go into a massive short position and drive the market lower. But let's take a look at our screens here, because we'll start out with the S&P 500. Momentum is shift. It's negative now. Now, how do we know that? Well, the RSI is still positive. That's the relative strength index, and momentum is positive anytime it's over 40, but it's been slowing down. But the MACD, or moving average convergence divergence, it's got a negative cross, and that's factoring into a downward trend in momentum. But one thing we look at to determine momentum is my own Momentum Timer Pro report, and this takes technical indicators like the RSI and the MACD, but we overlay a proprietary indicator to smooth out all the fluctuations. And what we see on the 1, 3, and 6 month window, momentum is maxed out. We've been warning there's going to be a shift here, and now we've only seen one daily sell count, and this is why we've been sitting out this rally, because we want to have dry powder to buy in from a pullback. We look at machine positioning. We modeled that it was going to sell off a little more than expected. We're seeing some buying push back here on our windows, because we run 2 reports every day, and that is to look at machine positioning and momentum to help you make money beating the machines, outpacing the trends and momentum. Check out the links below, because the 30-day free trial for these reports is going away at the end of the year. Jump on that, and while you're there, check out our sponsor of the show, Flex Shopper. You can find them on the NASDAQ under the symbol FPAY. Now let's take a look at the charts here, because what we see at the S&P 500 is a problem. It's been following this trend line up, and we've been warning that some point this trend line is going to break, and we've seen it rally down and touch that. It found support, buyers came in, but what's the issue here is we zoom back into the 6-month window, it ran right into its 21-day moving average, and then it ran out of steam. So what we're finding out here is that buyers are all in. There's not many buyers left, and what we're going to likely see as this rolls over with the corporates in blackout, it's going to come down to that 6-month volume profile. The risk then is you start to trigger machine selling, and you can see from the momentum indicators, momentum is definitely slowing down and trending lower. But let's take a look at the tech stocks, because we see most buying from momentum in the big tech companies. Again, we see the relative strength index and the MACD slowing down. We got that negative cross on the MACD. Our own Momentum Timer Pro does flag 4 consecutive daily buy signals, but momentum is stretched across the 1, 3, and 6 month window. Upside target, that's back to the all-time high. Downside target 509. We see machine positioning relatively long here, but as we noted, that can change very quickly here. Let's take a look at QQQ. What do we see? A similar scenario. We saw a meltdown. Retail came in and bought because corporates are on blackout, and what's happening is they're running out of money to buy this upswing. And again, we can zoom out to the 2-year chart. This trend has been extended. It's only a matter of time before it runs out of steam. We're seeing the early signs of that as we head into the next year. But let's take a look at something that's got a huge red flag on the market, that's small caps. Let's take a look here, because momentum is negative. The RSI is still in positive territory, but the MACD is negative. Our proprietary indicator is negative, and that's generating 11 consecutive daily sell signals. Now, we did make money on small caps a while back, but look at the machine position on our fast algorithm. It's at a max short level. We're seeing momentum moving to the downside as people are getting out of what was the once popular Trump trade. Now, we warned about this because we saw after the election, people flooded into small caps. Sellers came in, and buyers said, no, this is only going up. They drove in, and what happened? Nothing but selling since. It came right down to its 6-month volume profile. It's found some buyers here, but it's trending down. It's 9-day moving average. The risk here is this is going to roll over and come right down into the supply zone here. We could see it's near deep oversold levels, but keep in mind, markets can be overbought and oversold for extended periods. What we see now for small caps is nothing but downside here. But let's talk about the banks, because hedge funds are going long. Does that mean it's time to get out? I'll make the case of why, as the bank bull run seen thundering onward, with hedge funds loaded up. And well, that is a big risk for them, because when we take a look at the financial sector, the ETF XLF, what do we see? Momentum is negative here. The RSI barely in positive territory, but that's looking to change in a big way. MACD's got a negative cross. We've got 14 consecutive daily sell signals, and look at our machine position here. We've seen they're moving into a short position. We see momentum continue to head down. Our downside target now 46.85. Let's take a look at XLF here, because we think that this is going to get worse. And meanwhile, hedge funds are betting big. But what happened? You got this gap up move after the election. You see a topping pattern, clearly a left shoulder, a right shoulder ahead here, and it broke down. Buyers came in. This could be a bull trap for me, because it came right back up to where that gap up move was. If this rolls over and heads down, the hedge funds are going to get absolutely slaughtered here, and that puts in play the 6-month volume profile. Our first target right at that 100-day moving average in blue. But it's not just the big banks. Look at the regional banks. We see momentum here is negative too. This is on KBE. RSI, that's in negative territory at 37. MACD's got a negative cross. We've got 14 consecutive daily sell signals, and look at our fast algorithm, a max short. Now, you want to know when to trade momentum or to trade against the machines. We tell you every day in our reports. We look at changes in momentum, we look at changes in machine positioning, and I give you all my opinions on when we see trades flagged. You want to make money? We've got a big trade out there right now. You don't want to miss this. Jump on that 30-day free trial. Check out Flex Shopper. Again, on the NASDAQ, on symbol FPAY. Let's take a look at the chart here for KBE, because it's not pretty. It's telling us there's problems with the banks. What do you see here is we now look at a similar scenario to the big banks. Gap up move after the election, left shoulder ahead, a very lazy right shoulder. It broke support right where we had that supply zone indicated. Sellers came in, pushed price right down to the 100-day moving average in blue. But what is it doing? It's following that 9-day moving average lower. You see here when it gets that 6-month volume profile, it's game over. That's where we've seen all the buying support at. If it breaks there, it's headed right down to the 200-day moving average. And based on what we're seeing today, there's absolutely no indication that there's any buying strength here for the banks. But let's talk about the bond market here, because we know the banks are buying bonds in a big way. Meanwhile, we're seeing everyone else sell and short them. As treasuries fall, as long rates expand the gap over the short maturities. So does this mean it's over for the long bond? Well, many people say yes. And we're in a rising rate environment now, and it's really all coming from the longer end. There's a lot of concern about what the next administration will be doing and how it impacts where rates go. Many people believe presidents have full power over the bond market. Well, let me give you this perspective. The Treasury doesn't have power over it, and neither does the Fed. I can tell you this, presidents don't either. Let's take a look at the long bond. This could be a big buying opportunity at some point. For the moment, what are we seeing? Momentum negative. Clearly now in oversold territory with the RSI at 31. MACD's got a massive negative cross. We see 7 consecutive daily sell signals. Now, we've traded this without stop losses, and one thing we want to encourage everyone to do is control your risk. But what if you don't? What if you make a mistake? You get in a trade and you didn't do that? Just follow our research, dollar cost average in. Now, remember, we were once slightly positive on this, and then it pulled back. This is setting up another buy-in point. Our cost basis at 93.86. Friday's close 87.10. Upside target now 92.41. And look at this, max short across the fast algorithm and the slow algorithm. You want to know how to trade and beat the machines on the long bond? We're going to show you how to do that. And look at momentum. We're seeing a sell minimum on our 1-month window with 11 consecutive daily sell signals. So opportunity is going to be knocking here on the long bond. Let's take a look at TLT. But that day isn't today. So we're waiting on this signal to flip. But right now, as we zoom out to the 2-year window, everybody believes that rates are going to come all the way back to their 2-year high, matching the 2-year low in bonds. And right now, support is right where it's at now. It needs to hold here, because you know there's not a lot of volume between where it's currently trading and $84 a share, which is the next level of volume support for the long bond. For now, we're looking for anything that could change this picture, but at some point, it's going to be a huge opportunity. Let's talk about gold, because a lot of people are super bullish on gold, but look at this. Momentum is negative. The RSI is at 45. MACD's got a negative cross. We've got 7 consecutive daily sell signals. We made some money on this trade, but we think there's going to be a bigger opportunity in gold as it moves lower. Let's take a look at GLD, because if you like gold, we're going to show you an even better trade. But let's first take a look at what's going to impact the broad equity market. You see gold rallied on this rising trend. What happened? It broke down. What we found out, it looked like a bear trap as buyers came in. Well, those buyers got rejected. Then we saw buyers step in again. They've got rejected a second time. And now we're seeing it hang right around its 100-day moving average. The next move down here right around 232. You see some volume here before it gets down into the 222 range. But right now, this is looking like a topping pattern. You got a left shoulder ahead and you got a couple of right shoulders. The risk here is neckline somewhere right here around 240.56. Keep an eye on that. But again, if you like gold, look at the miners here. Momentum's negative. You got the RSI at 34. This thing is massively oversold right alongside the MACD. But you want to know when to buy into GDX. We're going to tell our subscribers you could be one of them, because look at this. Machines are max short. When they turn position, that's going to create a buying opportunity. We see momentum still on the positive side over the 1 month window, but not likely to last. We see a downside target of 33.48. That could be a huge opportunity to enter GDX. So let's take a look, because it rallied up against this rising trend line. Again, like gold, broke down. Buyers came in. They got rejected right down to its 1-year volume profile. Now, if it doesn't hold here, you're looking at a move all the way down here right around 31. Let's zoom out to the 2-year chart, because you can clearly see this big trend rallied up. Now it's pulling back. If it gets down here into 31, it's going to create a huge buying opportunity. But near-term support is right here at 33.48. Again, if that doesn't hold, look for a bigger opportunity. But let's talk about some other opportunities. One of those could be in uranium. Momentum's negative here, but it's coming down into a key level of support. We've got 14 consecutive daily sell signals, max short position on machine positioning, and we know that this is the recipe for opportunity. It's not here yet, but take a look at this chart for uranium, because what you're seeing in a big picture, it's right at a level of support. Now we can go back and see other points where it had a double bottom here, and what happened, it rallied from 27 all the way up to nearly 34. The last time it pulled way back down here into the 23 zone before rallying up to 34. So we're looking and watching this carefully. We'll let our subscribers know when our reports flag a change of position there, because we believe it could be a huge opportunity. But speaking of huge opportunities, let's talk about Flex Shopper. You can find them on the NASDAQ and symbol FPAY. All the information in the pinned comment and description below, because we think their stock is setting up for a 22% move to the upside. Let's take a look at what's going on with them, because they offer cutting edge technology that enables the traditional retailer to offer their services and or products to a demographic they weren't previously able to target, the subprime consumer. Our omni-channel payment solutions include lease-to-own e-commerce marketplace, on-site e-commerce payment model, and mobile applications for in-store point of sale. And we talked about back in July that insiders were making big bets on the stock by buying it, and well, that's paying off in a big way. Our subscribers took advantage and they've made a ton of money. Let's take a look at their recent press release from last week, where they announced record initial holiday season results. For the first 2 months of 2024 fourth quarter compared to the same 2-month period in 2023, lease growth revenue increased 15% and lease net revenue increased over 25%, as bad debt expense as a percentage of gross revenue declined by 600 basis points. As a result, lease gross profit increased 51% for the first 2 months of 2024 fourth quarter, while lease marketing expense has declined over 40% for the same period. New loan originations increased over 34% versus the same 2-month period last year. And I'm encouraged by the positive contribution to our DTC and B2B growth strategies are having on our initial holiday results in the last quarter of 2024. And I'm excited about the opportunities we're pursuing for 2025 and beyond. This from the CEO. Flex Shopper has experienced robust and profitable year-over-year growth while simultaneously improving credit quality as a result of the innovative platform we've developed. We expect these positive trends will continue as prior lease originations are recognized as lease revenue and benefit financial results in future quarters. As a result, we expect a record fourth quarter of 2024 and a strong start to 2025, which could send their stock shooting up by as much as 22%. The CEO continues by saying we've experienced favorable demand trends for our FlexShopper.com marketplace during the 2024 holiday season. In fact, online origination set a daily record on December 18th, driven by high consumer traffic and expanded product offerings. As we close out 2024, we're seeing additional opportunities to grow our B2B partnerships and increase our exposure to more customers, while we also pursue a differentiated growth opportunity by serving more customers directly on our flexshopper.com digital marketplace. I look forward to continue to update investors on progress we're making as we pursue multi-year growth strategies to create long value for our shareholders. And today's announcement continues a positive momentum underway as FlexShopper pursues a profit-focused dual-channel growth strategy as FlexShopper has expanded its access to over 5,600 retail locations and over 12 new e-commerce websites. FlexShopper's partnership growth strategy has expanded the payment solutions and product offerings on their website, and these trends have positioned FlexShopper for higher revenue growth and profitability. And we think that could send the stock a lot higher here as we take a look and we see from the relative strength index and the MACD, they're bottoming out here, looking as we see a change in momentum. And over the last 5 days, we've seen buyers step in here and support the stock, creating a floor underneath. And what we believe is that buying support could send the stock up from its current price right up into this supply zone at just over $1.80 a share. And again, as always, with any company we feature on our show, you're under no obligation to purchase their stock. Be sure to do your own research before placing any trades. And with that, I'm Steve Van Metre. Thanks for watching. Thanks for being fans. Bye now.